There's been increasing pressure on the ECB to act to kind of stimulate the region's economy. How soon could we see the ECB act, potentially?
I think we're going to see a two-step move by the central bank, meaning at the January 22nd meeting they announced in principle a move to do sovereign QE, but they only present the details in March. And the reason for the delay between announcement and kind of unpacking the substances to let the electoral context in Greece play out through the month of February, because we know there is the chance the Syriza administration is going to come to power, and they have threatened to do a number of things on the ECB SMP loans that they hold. But there are a number of other reasons as well. There'll be data releases in March. The ECB's own forecast, typically they act on the basis of their own forecasts. I think that'll be another important data point. There is still a sense, I think, within the Governing Council, the need to assess, let's say, the impact of measures already undertaken, the TLTROs, the ABS purchases, and a few more months will give a little more detail on the impact that's having on aggregate inflation and growth expectations. So I think they're all factors that will delay the ECB actually implementing in January.
How big of an influence does Germany continue to have in terms of what sort of stimulus plan we'll likely see from the ECB?
I mean, German opposition is critical, and it will be internalized into both the design and ultimate effectiveness of QE. So what do I mean? In terms of design, we're going to use some form of risk-weighted mechanism, probably the ECB capital key. Of course, that will undermine, on some level, the effectiveness of QE, because it does mean you have to intervene in Germany's secondary debt market and buy a fairly large amount of German sovereign debt in order to affect inflation expectations in the southern periphery. I think even more important is the fact QE will not be complemented with a fiscal expansion. I mean, that's really where you do see German opposition to a change in the aggregate fiscal rules in the euro area, undermining the effects a monetary stimulus can have in this context when borrowing costs are as low as they are.
Are we starting to see those lower fuel prices have an impact on the potential data points that we'll be getting in January, February, and March?
Right. I mean, I do think the Eurostat's recent estimate, I think a couple of days ago, began to incorporate more of the impact of the decline in oil prices. But I think there is the expectation that these numbers will be further revised downwards as the effects of oil are further incorporated, certainly into the ECB's forecast. So if anything, the working majority in favour of QE will be reinforced by the data points. But as I say, there is a non-negligible opposition that does believe things such as internal price adjustment in the southern periphery are part of the course to regain competitiveness, and remain opposed to a QE move, Germany being the most prominent. And I don't think the recent prints nor the overall, let's say, context of falling oil prices is going to change the way Germany thinks about this. I think, from their perspective, the ECB does more than member states do less. And as far as Germany is concerned, they don't want the ECB to substitute for government action on structural reform. That's the way they're thinking about this.